Hello, everybody, and welcome to VRIC Media, your most trusted voice in metals and mining. We are, of course, bringing the VRIC to you each and every week with our series of expert online panels. We have a great one lined up for you today. We've got Don Durrett, the founder of goldstockdata.com, and John Feneck, president and CEO of Feneck Consulting. We're going to be honing in on the gold and silver sector, both the metal and the miners, and find out where they're looking for value today. Gentlemen, it is great to have you back on the program.
Thanks for having us, Jay.
Thanks for having us.
Jesse, excuse me.
Absolutely. Well, let's start off with getting your current take on the trade war between the US and China before we go ahead and dive into gold and silver and mining stocks. Trump's global tariff policy, a trade war seems to be brewing in full force, however you want to look at it. We've now seen China, Japan, South Korea, and some other South Asian countries get together and kind of jointly declare that they're going to take certain actions to protect their own interests by doing more trade with each other, which it could be a very positive thing for that part of the world. But I wonder what your thoughts are here on the Trump administration's overall strategy and its potential implications on the global economy and financial markets. And Don, I'll start with you.
Yeah, I think it's much more complex than Wall Street is kind of saying. They're kind of saying that, Trump's going to have this first quarter, first half of pain, and then he's going to fix everything. This is kind of a short-term thing, but this is not short-term at all. Trump is not going to back away from his tariff policy. I think tariffs is a integral focus of his economic policy, and it's not going away. But that those tariffs, I think, are desperation. This is America is floundering, and everybody's in denial about this. And we've been floundering. The American exceptionalism, which we had from 1945, I mean, you could say until now, but I would say up until about 2000, where we dominated all aspects, globally. And then China kind of started catching up, in the late 90s, early 2000s. But we've been the dominant economy, but we've been floundering since 2000, and the since then we've kind of adopted MMT where debt has just totally exploded. And nobody really wants to look at the whole picture and kind of connect the dots. It gets really complex, and it's hard to put, in sound bites. Like Trump, he's not going to be transparent on kind of what he's trying to do, what he's trying to accomplish, because you can't really do that. It's really difficult, in sound bites or 20-minute interview to kind of really explain why he's using tariffs, make America great again, bring back jobs. But it's much more complex than that. This is Triffin's dilemma unfolding. We've reached a limit. We've reached a wall here. And we've been trying to live off debt for actually since the 80s, if you really think about it. We had this mercantilistic dominance until 1970, because after World War II, the rest of the world was decimated and America had the whole thing to itself. Europe was totally rebuilding. Asia didn't even exist. So the US had this unbelievable advantage over the rest of the world. And that kind of came to an end in the 70s. And now we adopted globalism in the 80s, but it was not a solution because Triffin's dilemma basically said, you can't adopt free trade. If you do that, and Triffin explained it. Triffin basically was the big red light, red siren saying, Trump, Reagan, you can't do that. You can't do that. You can't have free trade. If you have free trade, you're going to hollow out the middle class. Now, 75% of families have financial stress today. That's Triffin's dilemma unfolding. So Trump's in desperation mode, and everybody is so simple-minded about this whole thing. Wall Street, they just look at this current quarter, they look at current earnings, they think everything's fine. It's not fine. This is everything's on fire right now, and Trump's actually putting gasoline on it. And then when they finally put the water hoses on it, it's going to be too late. That's kind of the situation that we're in here. This trade war between China and the US has been ongoing. This has been an ongoing economic war since China basically started, coming to life, if you will, in the 90s. It's been an ongoing economic war, and all this, and now we have this trade war that's part of it. That's the reason why you don't have these negotiations. Trump doesn't want to fix globalism. He doesn't want to create free trade agreements. It's not his agenda. I mean, he's not going to, we're going to do a trade deal here, a little trade deal here, and then everything's fine. It's not. Like I said, he's pouring gasoline on it. I firmly believe we're heading into recession here, and there's so much to unpack. There's so much to talk about around this whole subject. I mean, we could talk about just this question for an hour. But if you look at the stock market, look at its valuation, 5,600. In order to maintain that at 5,600 at 21 times earnings, we have to have at 21 times PE. We have to have earnings the rest of the year, the next 3 quarters, they have to average 11%. In other words, Trump can't cause any more damage. Everything has to basically be just smooth the rest of the way to maintain 5,600. And everybody's confident that's going to happen. And so what I think is going to happen is right now we're in the happy zone. We're above 5,500 on the S&P. That's the happy zone. Everybody's happy. Everything's great. Everything's great, right? Nobody's crying. I mean, if you turn on the business shows, the CNBC, everybody's confident. Everything's great. I mean, I crack up in the morning. I wake up and I stretch and I watch the halftime show. It's a comedy show. It really is. I start laughing. I can't stop breaking out laughing when they start talking. So we're just barely above the danger zone, and they won't even admit it. So the danger zone is 5,500 to 5,000. So 5,500 is a correction. 55,000 is a bear market. That's the danger zone. You drop below 5,000, you go into the sell zone. That's when everybody's jumping off the boat. And everybody, oh, we're not going to go there. We're not going to go there. And then we're going to stay in this danger zone here in May, and we're going to fall back into it. I'm fairly confident, and we might even go below the danger zone to the sell zone. And then once you're in that sell zone, that's when everybody's going to be all nervous. That's when everything starts going to break down, and that's when this recession that I said is coming is going to happen. And 4,500 is when that's when the recession begins, once you go below 4,500. And Wall Street right now, none of them are expecting 4,500. None of them. And it's coming. And so once we get, danger zone, sell zone, recession zone, that's what I think what's coming in the next 90 days. And Trump, and on August 2nd, Trump basically, Liberation Day, he basically put a pin in the debt bubble. He basically has popped that thing. And now everybody seems to think that he's going to come. He's going to back down, if you will. July is going to be worse than August 2nd, I think. I'll end it there.
Very interesting analysis. And today, I believe he's coming out now saying he's going to put 100% tariffs on movies made outside of the US because they pose a national security threat. That's kind of what shifted me from the maybe he's got a plan to, okay, this is just getting, that's what you're paying attention to. I don't know. Maybe he knows something I don't. John, what are your thoughts on this tariff salvo and its aftermath and how you might expect it to impact the economy and markets?
Yeah, thanks, Jesse. Great job, Don. Don and I get a lot of comments on our YouTube show, which we've been running for about 2 years, that we have a lot of information in our heads, and you just saw a great display of that from Don. One of the things Don said is that tariffs are not short term and they aren't going away. I totally agree with that. We've been talking about that since November 5th. We said, this guy is serious. You have to get on board with the Trump narrative. And we said, this is going to mean good things for US everything. And we included that, the mining sector, in that comment throughout November and December. As our sector, the mining sector, was getting smoked, we were out there saying, look, Silvercorp was doing great volume SVM at $5 every single day up until November 5th. And then it went to $3 in December. In 7 weeks, it went down 40%. And in talking to the company reps, there's nothing going on, right? It's that time of year, Jesse, that we've talked about in your show for 3 years. Like, you have to be real careful in November, December because of tax loss selling. And that got exacerbated this year because of the Trump victory. So we've been telling people, prepare for chaos, prepare for volatility in 2025 and beyond. And we've gotten it. I mean, April 2nd, as Don said with Liberation Day, was meaningful. And if you don't believe me, I mean, look at Apple as a proxy, right? Let's forget about mining and gold for a minute. AAPL was down 23% in 5 business days following that announcement. That is ridiculous, right? So clearly now in hindsight, that was a buying op, but it wasn't clear on day five, right? When you're a retiree and you're down 15, 17, 20, 23, we call that the difference between investor and investment performance, Jesse, where someone bails on something like that and doesn't ever get back in because they're totally scared. That's what's coming, I think, if I'm reading Don's, messaging, where we get through certain zones here where people say, that's it, I've had it, right? And interestingly, if you look at April 21st and what happened with Trump, he came out and literally just said very casually, like, I don't have a problem with the Fed. I wasn't saying any of that stuff about Powell. It's like, and the market loved it, right? The S&P was up 4.5% in 5 calendar days following that. This whole thing is BS. Like this is going to get changed possibly this week, right? Because the Fed is meeting May 7th. I'm of the belief, as of most people are, that nothing's going to happen. There's no cuts coming May 7th, right? Some people are doing this and saying, "Oh God, I really hope we get a cut." That's not a strategy, right? I think May 8th, you see Trump go right back after Powell and say this was ridiculous and why aren't you cutting rates? And then the market is going to deal with, kind of internalizing that through May and June. And then when's the next Fed meeting? It's June 18th, right? I mean, June 18th is an eon away in this market. You have to be kidding me. Like, if you're a trader or even a long term investor, you're going to be spooked if Trump goes after Powell again in May. And I think that's inevitable. So I think this rally is fluff in the broad market. And we've been telling people, look, you could selectively short it, or you could just take this gain and run with it, right? If you look back at a chart of the S&P or the NASDAQ since March of 2009 to now, you have been so lucky as an investor. Part of it is luck. I don't care what anyone says. Don't tell me it's all strategy and skill. This is you throwing darts at the market and doing really well, and good for you. But recognize that it's not all you doing this, right? The market is doing things that is creating wealth for Americans, Canadians, wherever, right? Like, I mean, the markets are going crazy up since March of '09, and you have to take some gains at some point.
Yeah, fantastic thoughts from both of you. I would also love to get your input now on the gold sector, the current strength of the gold market, one of the few assets that held up while a lot of the rest of the market was dropping in the aftermath of Liberation Day, showing its strength perhaps as a safe haven in times of economic uncertainty. I wonder what your thoughts are. Do you think we could see a potential pullback in the price short term? Is this early days for gold? What are your thoughts, Don?
So gold went from 2,600 at the beginning of the year to 3,500 in 3 months, a little over 3 months. Yeah, 35% move. Why? Everybody should be asking yourself, why? Is the gold going just absolutely ripping higher? Now, it has something to do with Basel III, of course, where basically we're making gold a tier one asset. And so that definitely we don't a lot of times we get cross currents where it's hard to understand what's driving things, and this is one example of that because you have the Basel III. But I think what's actually more important to that is the fact that the US economy as has been manipulated, and the bond market is getting to a breaking point, if you will, where we have this $2 trillion deficit and we have to borrow $166 billion every month on average. And foreigners are slowly pulling back, retracting how much money they're buying in the bonds. And so the US economy is based on foreign money, basically supporting our standard of living, buying our debt. We export debt. And gold is basically saying, I think, front running, saying, we don't know how much longer this can work. If the US does go into recession, which we're close to a recession, we haven't been in a recession since 2009. If the US goes into recession, what happens to the bond market? What happens? This whole liquidity where we're over leveraged. I think gold is basically showing us this uncertainty around what's happening with the US economy, which is 25% of global GDP. Gold is the canary. Gold is the new Mag 7, if you will. You buy the dip. Gold is going higher. Gold is the leader, if you will. So gold was up 35. Now I think it's up about 24, somewhere around there. for the year, whereas the S&P is down 5% for the year. So gold's the new leader. And so I don't think, and I've been saying, I've had to keep raising my floor for gold. I mean, at the beginning of the year, I think I had my floor like 2,300, and now I have it all the way up to 2,800. It just keeps going up, up, up. I mean, that's a crazy jump, $500 jump in the floor in 3 months. And the reason why the floor keeps going higher and higher is because gold, it's all about the U.S. economy. The kryptonite for gold is a strong U.S. economy. If you have a strong U.S. economy, the best example is the 90s. In the 90s, gold was like 200, $250 through the whole decade. Because the US economy was strong, nobody could care about gold. So gold went from 800 in 1980 all the way down to 250 in 1990 and just stayed there for 10 years. Didn't even move. And the reason why is just the kryptonite. We don't need any stinking gold. Everything's fine. Low inflation, strong economy, don't need any gold. And now that was $250 in 1999. And now we're at 3,500, $250 to 3,500. Something broke. Something broke. And what broke was the US economy broke. And everybody's in denial about that. It's like, all you get is propaganda. So the people that are in control of the narratives is industry. It's industry because industry needs investors. And so all the cable news channels, Wall Street Journal, all that media is all industry. And so it's propaganda. Nobody really wants to talk about. And so you have to go outside of that. It's really interesting. Now we have all this social media, like what we're doing right now. We're talking about this. But our voice, people don't hear what we're saying, or they think we're nuts. You're absolutely wrong. There's no way. Triffin's dilemma is a bunch of BS. Von Mises bubble is a bunch of BS. When this thing pops, when you get a top in markets, it takes a long time to get back to that top. In 1929, the nominal high, we had to go all the way to 54, which was 25 years. Then and then we went up from 54 to 66. And then at 66, we had a peak. It took 15 years to get a new nominal high in 1982. Then in 2001, that high, we did get a little nominal high there in 2006, but then it went down. You had to go all the way to 2016. So in many respects, it was a 15-year gap. And so when you get a top, it's a long time before you get a new one. And I'm saying once this bear market starts, it can be brutal, very brutal for stocks, and that's the reason why gold, um, you know, I think it's going higher. I have to keep moving my targets up on gold. I'm 4,500 right now, and I think it's too low. I think 4,500 is too low. And so the gold miners are looking better. We have another question. We'll get there about the gold miners, but as far as gold and silver go, I think it all is the opposite of this, the opposite of the economy. So gold's going to go higher because the economy is going to get weaker. If the economy does come back to life for somehow, if you will, and it has to be real growth. Everything's been manipulated growth since 2009. And the last time we had real growth was the 90s. It's been a long time, people. You need to have 4% interest rates and no inflation and growth. We haven't had that since the 1990s. So it's all been manipulated growth. And gold is saying, you don't have real growth. Well, I'm just going to keep going up. And so that's what's kind of happening here. And so, yeah, I just think that gold is a new max 7. So if gold dips, I don't think gold's going to go below a 10% correction is 3,150. So you take, we were at 3,500, so that'd be 350. If you take it to 3,150, I think 3,150 is a good target for the next downturn. But I think it'll be somewhere between 3,000 and 3,150 on this next leg down. But I don't think we'll go below 3,000. If we do, then you got 2,900 and 2,800. One of those two will hold. That's why my floor is at 2,800, and I'll stop there.
And John, your thoughts on the current health of the gold sector and where you see it headed moving forward?
Well, Don covered a lot of this, so I'll keep it brief. But I mean, gold has been cranking, and we've talked on your show for a number of years now about what Don had pointed out early in his comments, which is the gold floor, right? We were talking about 1900 as a floor. I remember coming on two of your shows saying that it had held 1900 every day for 5 months plus, right? Like that was an indication to you that things had changed. If you look at the Russia invasion in February 2022, China started to really consume. Like you think China and India are the leaders, you'd be right, but they started to really pick up consumption in February of 2022. You can see it in the chart. And then other central banks followed. And then you have other factors that we've talked about already on this show today that are starting to contribute, like tariffs, to the fear trade, right? Gold loves fear and uncertainty. So I think we're in that kind of environment, Jesse, to kind of read through the tea leaves and Don's comments where two camps are being built. It's the momentum Mag 7 guys, and it's us on the other side that are saying, hey, you can make money other ways as well, right? And it's very compelling when I know we're going to talk about miners here in a minute. So let me just say this, because I think your investors can really get something out of this. When you look at the S&P 500 right now, it's 500 stocks, right? It's over 40% technology stocks. It is less than 1% in metals and mining. It's one stock. It's Newmont, NEM. So that is going to change. And you don't need it to change from 40 to 30 and 1 to 10. You need it to go from like a fraction of 1% to 1.5%. And you're going to see so many fund flows in mining, it's going to blow your mind because most young traders don't understand how to trade our sector. I've seen it many, many times. I look at a screen 12 hours a day. You see a huge flow of money come into things in 2016 or 2020 in these little stocks, right? Like even the mid-tier stuff. And the stock's up like 7 to 10% in a few hours because there's no liquidity in some of these names, right? And so the traders that are getting into the sector don't understand this. They just look at the largest names they can find and think they can pile in. It's not the case because a lot of these stocks, even the biggest ones, have smaller market caps. So I think that's one of the things that we focus on is that if Don's scenario is correct and you see a test of 5,000 and a break of 5,000 into a danger zone, as he puts it, then you're really going to start seeing some sector rotation into names like Agnico, Newmont, et cetera, that have just posted some really good earnings just recently.
Yeah, great point on the earnings results. Obviously, with gold at nominal all-time highs, we're seeing a lot of these companies just printing cash, and it seems inevitable that the market will eventually wake up to this at large. So let's talk about gold mining stocks in particular now. It does look like as soon as gold starts to show a little weakness, we do see the miners sell off. I mean, I track just a certain basket of gold miners, and when the gold price takes a small hit, you see a bigger hit being taken by the kind of collective majors and developers. And I don't follow the explorers, but I'm sure it's the case there as well. What are both of your thoughts on where we're at right now when it comes to the gold mining sector? Is this a time to pile in? Obviously, you have to be disciplined about that in terms of where you're allocating capital. Is this a time to be sitting on the sidelines, somewhere in between? John, I'll start with you on this one.
Sure. We don't recommend piling in. We've talked in your show a number of times about taking some type of risk, right? Get a foothold in a stock and then build a position over time, right? That's really been my mantra my entire career. It works extremely well for me, meaning that, you put a little small buy out there, then you buy 4 to 6 to 8 times on the way up, and that way you get a blended average cost basis, and you're not just betting on one day to be right. And I see that all the time with newsletter writers in this sector and stuff. Like they put out one day that they bought this stock. It's like, what kind of crystal ball do you have? And do you have a public track record like me? You probably don't, right? Like, a lot of these guys just are misleading clients. So when you look at like the gold mining sector, it's very exciting. I just pointed out the earnings, Jesse. So let's take Agnico Eagle, AEM, as an example. They just posted a non-sustaining cost per ounce, which is AISC, of 1186. Okay, gold's at 3,000 plus. The margins for that company are insane, right? And Newmont, higher costs, yes, but still a decent quarter. And both of these stocks, went up on the news, but then faded, right? Very frustrating to gold investors because we want to see follow through. And you can see follow through in the chart of AEM over the course of 2 or 3 years. It's beautiful, but people want to see the continuation of these stories, and I get that. So there's an opportunity to buy some of the smaller stuff because the bigger stuff like Agnico has worked already. So we look at stuff like US Gold. Don and I interviewed them a few months back, USAU, on the NASDAQ. Great liquidity, very small share structure, 12.3 million shares out. George B., an absolute killer at CEO, has worked in much, much more difficult jurisdictions in Chile and Peru and places like that where you've got no infrastructure, no water. Like, I mean, this is Wyoming. They got their permits in November, and so it's not even a permitting issue anymore. They're not even worried about what Trump says, right? Because they already have their permit in hand. Now it's just a matter of how do we raise the capital in an intelligent way so we don't, dilute the heck out of shareholders. And I've already talked to George and the team there. They've got a plan for a split between debt and equity, right? A lot of people just assume equity, but that's not the case with this stock. So, best name I've ever heard of, if you're a gold believer, US Gold, in this kind of environment, right? And a great listing with a tight share structure. We really like that. And then when you look down in capitalization, you've mentioned some of the explorers and some of the smaller names. We've generated a lot of alpha for our portfolio in this area over the last, 15 months. One of the names would be Denarius. I just talked to the chairman there, Serafino Iacono. That's DNRSF. They just went into commercial production in Colombia. So, this is where I think investors could also benefit from this, Jesse, is that Colombia is a place where I've had friends kidnapped in Colombia years ago, right? And so you kind of have a closed-minded approach to certain parts of the world based on your experiences, right? That's normal human behavior. But you have to go and ask the other questions about like what has changed since I was last there or my friends were last there. And Colombia is going through a renaissance right now. And Serafino and his team have been there for 20 years. Like Serafino was one of the main players at Aris Mining, ARMN. So he has now, hit the reset button with a junior stock. They went into production in Colombia. Everything's on track. They're going into production in Spain, I think, in less than 12 months. And then they've got a third project, right? So when Don and I got done interviewing him, we were like, man, there's a lot of ways to win in this story because it's not just one project, right? So we like that name. And then lastly, a small little junior I found on my own research last fall was Quest Corp, QQCMF. Quest Corp basically was a one-trick pony. They had one deposit in Canada, wasn't getting too much attention, and then they purchased something in Mexico with the idea that Scheinbaum or someone else was going to take over in the fall. And sure enough, I mean, you can see the some of the stocks there, like Avino and Discovery, have started to really perk up because they're starting to either get their permits or they're going to get their permits. Is what the market's telling you. And I think Quest Corp is in that position now that they've picked up this nice property in Mexico. So they were going to raise about $1 million, then it was 2 million, now they raised 2.7 million. So when you can see a little junior stock like that no one tracks at 4.5 cents, right? Now it's I think at 11 cents US. But I mean it's up a couple 100% in 3 months. It's like the upside in some of these juniors is amazing. They've just been lying dormant for years, right? So I kind of have a blended approach of large caps, mid caps, and micro caps.
Great breakdown. Don, your current thoughts on the gold mining sector and any names that you're watching right now?
So as far as entry, you said is now when you go all in or whatever. So, I've been following the HUI chart. I've been following it my whole career. I mean, it's been around forever. And the reason why I like it is they don't have a lot of royalty plays in, so it's kind of a pure gold miner. They do have some silver miners in there. Um, but it's been stuck. I call it the chart from hell, if you will. I mean, they've just been stuck in this range for since 2013. So we're over 10 years just stuck in this range. And the top of the range is 365, and we just broke out of it and we got above 400. And I thought that if we got above 375, that was like the first week of this month, we broke out. Um, and then I thought if we stayed above 370 for like 2 weeks, that would probably be enough to get it to just take off. but it didn't. It got to 400 and stalled, and now we went down to 376. Today we're back to 386. But I think we're going to go back into that chart, go back into that range one more time. Maybe we'll just retest the top of it. That happens sometimes, 365 and bounce off of it. But this is since we basically haven't broken out. So the bull market in the miners is when we get out of that chart. And John mentioned 1900 gold. Once we got above that, we were kind of off to the races. And we haven't had that off to the races moment yet in the miners yet. And I've been saying that you're not going to get it until silver breaks out. And so silver needs to get above 35. So I think silver above 35 and the HUI above 400, we're probably going to be off to the races. So right now is a good time to get in. My favorite way to invest is to buy to the bottom. And so if you take some entry prices now, and then you can just buy it as it goes down. If it goes lower from here, just you're lucky. Keep buying. And other than the high quality producers, most stocks are very, very cheap. It's pretty amazing. Most of your development plays are very cheap. There's not a lot of expensive ones out there, unless they're close to production, but most of them are extremely still cheap. So you can buy the ones cheap now. Now, if there's a quality producer, I think it's a really good time to wait. Like I have three producers I'm going to wait and buy them at $4,800. I'm waiting for not $4,800, 4,800 S&P. So I'm going to wait and buy those three then. And so it's three producers I don't own. And I've decided I want to add those three, but they're quality producers. And so I'm going to wait until we get to 4,800. So it's not a bad time to wait, if you will, because I do think we're going to get one more dip down. I mentioned earlier, I think we're going to go to 3,150 on gold, 33,000. Now, I could be wrong here, and we don't have that dip. But you have to be disciplined and patient sometimes, and be stubborn and say, I'm not going to buy this stock. For example, one of the examples is Evolution Mining. So they're trading about $5 US. And I'm like, I'm not going to pay 5, but I'll pay 450 or 4. So I'm going to wait for that dip. But those are the high quality ones. A couple other ones you can wait for is like some of the real strong silver names. They're cheap, but I think you might get them less. So we have Coeur Mining. I think it might be you could maybe take an entry here. I really think that Coeur is going to do extremely well over the next couple of years. And so you could take a position here and then you could wait, and then hopefully you could buy it 10%, 20% lower from here, which would be outstanding. Buy it to the bottom. The other one with Coeur that I think it looks really, really strong is Fresnillo. And so that would be another one you could buy. Those two you could buy to the bottom. And then Avino. Avino's been a monster, but it's still unbelievably, I think upside is still huge. And so that would be another one I would, wait or buy to the bottom as well. So yeah, but I do think that we only have 30, 60, 90 days left to buy these stocks cheap. Once they double, you're going to lose half of your upside. You don't want to wait and buy these stocks after they double. A lot of people will. Most investors will not buy any gold and silver miners until they double. They'll wait because that's when the FOMO and the herd kicks in. And just about all these stocks are highly undervalued. They're going to double quickly. The first surge is usually the first big move. That's when you just get this big oomph, and that's when everything doubles quickly. For instance, when we go to $40 silver, I expect every single silver stock to double, and then double again from 40 to 50. It's going to, as Rick Roll likes to say, it's going to rip faces off. I mean, you're going to turn on the news and Hekla's going to be up 25% a day for 3 days in a row. It's like, what in the heck's going on here, people? That's what's going to happen because these stocks are undervalued and sentiment is in the toilet. And when it turns, when the sentiment turns, you get this big herd. All this money just comes whooshing in. And I think, we talked about margins. So last quarter, the average gold price was 2,800, and the break even is about 2,000. So the margins were about $800. Well, guess what? As we speak right now, the margins are $500 higher than that, 3,200, 3,300. $500. I mean, you have $1,300 margins right now, average 1,200, 1,300 if gold doesn't go down. Um, 800 is really healthy. Once you get $1,000 margins, it kind of gets insane quickly. I mean, the amount of cash flow these companies can generate at $1,000 an ounce, $1,000 an ounce margin, it's pretty significant. And what I like to say is that when a company has a clean balance sheet, when I say clean, I mean no debt and like 200 million in cash. At that point, every dollar that comes in is going back out to your shareholders with through dividends and buybacks. But actually, in Canada, you can only do buybacks at 5%. They won't let you buy back 10% of your stock. But at 5% a year, it starts adding up. I don't know what the rule is in the US, what the buyback is in the US, but or Australia. But we're going to see lots and lots of buybacks. And over time, the combination of buybacks and higher dividends and clean balance sheets, you're going to see the multiples explode. The multiples right now are averaging, last time I looked, 6 to 8, which is pathetic, absolutely pathetic. They're literally 50 to 100% below normal at these margins. I would say 100% below. They should be at 12 at these margins, but at least 10. And I mean, we're not seeing any of these quality, like Agnico Eagle or, at Newmont, we're not seeing multiples that it's kind of ridiculous what their multiples are at right now. I think Agnico's got like a 12. It should be at least an 18. And Newmont's 10 or 9, and it should be, 14, 15. And so these companies are going to rip once once it gets going, if you will. And so, yeah, we need a fear trade. I mentioned it earlier that the big thing about gold and silver is it's people don't want to own it. For instance, right now, more people are going to a coin shop today to sell silver than buy it. More. And it's not 2 to 1, it's 3 to 1, 4 to 1 sellers versus buyers. And that will completely flip once you have a fear trade. Completely flip. The fear trade, you'll have many more buyers than sellers. They'll be overwhelmed. And matter of fact, at $40 silver, you will not be able to buy silver in your local town because they don't have a lot of inventory. It only take 10 people to buy it all. They just don't. They just don't carry that kind of inventory, and so they're out. It won't take much because there won't be any sellers at that point. The sellers are all gone, and so that's what we're waiting for. We're waiting for that flip where you have more buyers and sellers in silver, and that won't happen until you get to like $37 silver, 38, 39, right in there. But by the time we get to $40 silver, there's this whole term, unobtainium will kick into gear.
Yeah.
And every town, I'm not talking about your town, I'm talking every town in America, you won't be able to find silver locally. It just, and then you'll go online and then it won't take long and then we won't be able to find any online either. I think fear is going to be higher than 2008. 2008, fear exploded, right? I think it's going to be higher because everybody kind of know we didn't have a bond market problem in 2008. We didn't have a Fed problem in 2008. This is a whole new animal here. Back then, we could deal with our problems. We didn't have the inflation problem. This time, it's like, uh-oh, we're literally kind of on a high wire without a net kind of scenario here, I think, and that's why you won't be able to find any silver because fear is just gonna take off. I need some gold. Well, I can't afford gold. Okay, well, go buy silver. Silver becomes a proxy. It's like, and once they close a couple regional banks, that's when it's really going to kick in because they're going to like, okay, I don't trust my bank. If I don't trust my bank, I better have some gold and silver.
So yeah, Don,
Yeah.
I'll piggyback on that because remember when we had those banks go bankrupt not long ago, silver stocks like Guanajuato Silver, I just remember that one, GSVRF, it was up 90% in 30 days. It was, and silver was humming, but then the equities, Jesse, they have so much more leverage. Like you were pointing out, the downside, well, you get the upside too, right? So when you get a move up in something like silver, some of these stocks are not hedging any production, so they can just rip, and that's what is so exciting about the silver equity trade.
Yeah, well, John, why don't you dive a little bit into the macro for silver? We'll end on that because Don, you gave some great thoughts when it comes to
Sure.
silver. So if you could maybe cover that, a few silver names that you're watching, and then before we hit record today, you were also talking about some critical materials, antimony, and a few other things that you're watching, and that's become particularly pertinent with this whole U.S.-China trade war. So maybe if you could unpack that a little bit for us too, that'd be great.
Sure. So silver is our biggest holding. Most of that holding was accumulated from year 2000 at like $8 an ounce all the way to 2020 when I was buying in COVID, and we were buying the triple ETF on silver as well as physical silver. We were all in because when you see a move in a metal like that, Jesse, it's just ridiculous. I mean, it's not a stock; it's an actual commodity, right? So you have to like find where you can find an entry point that you feel comfortable with that you can sleep with. But we bought five other times last year for the first time since 2020, which we didn't buy anything in 21, 22, 23. So I bought five times last year from 24 all the way to 30. And once we got to 30, 30 is that magic number that hopefully will hold here. We saw it break 30 just recently with the tariff stuff because silver was down like 12 plus percent in 2 days. So that selling was just feeding on itself following the April 2nd announcement. But that literally came right back if you look at the chart to break 30 to the upside, and it stayed there since then. So I think if 30 can hold, which was major resistance for 11 years, that's really really bullish for silver this year. And as Don pointed out, we've been talking about a 35 resistance level now for months too, and silver failed at 35 to be frank, recently. So it's going to be interesting to see if it can get through 35. Then you've got a little bit of resistance around 37, but then it's a pretty nice move all the way to the all-time high of 50. And I can remember being a buyer of silver back in 2011. And to Don's point, you can't go to local stores and buy the Eagles. They're just not there. They weren't there then. It's gonna be worse now. So, you have to buy in advance, right? Like with the idea that, okay, yeah, we're at 32 today, but we're going to see 35, we're going to see 37, and don't wait till then to buy because it's just not going to happen. Or you're going to pay ridiculous premiums, right? If you look at eBay, some of these premiums are insane. So I like silver a lot. I followed it for a long time. I was on the Sprott team in 2016, 2017. And we have a lot of silver equities. Our number one silver equity holding right now is Aftermath Silver, AAGFF. Michael Williams, the founder there, and I have been pretty close for 5 years, and he just said, "Look, man, we're gonna build a lot of silver ounces in the ground, and I'm not bringing this out until I'm not going to press for a construction decision until we get higher silver prices, right?" Well, now we're getting to a better environment, and on top of that, last year in February they came out with excellent manganese news, which is a critical mineral, right? Like you were just talking about. So you've got the silver and copper that they always had, but now you've got manganese as a kicker, and it's 99.9% battery grade. So this is like meaningful to add to the NAV of the stock, in my opinion. And I'm not the only one who thinks this. Eric Sprott in September and October last year put another 15 million US, or sorry, 15 million Canadian into the stock. So, Eric has a 24% position right now in Aftermath, which again, Eric doesn't go out there over 20 a lot, right? So he does a lot of 9.9s and fives, but 20 plus is like you got to obviously go public with that information, and it's more of a drag for someone like of his stature. So I think the stock's going to work extremely well. We also like larger stuff like Pan American, PAAS. It's between 23 and 24 right now. There's a lot of ways to win with that stock. They just are just going to continue to do well in a hot silver environment, I think. They've got earnings coming up in a few days, so investors may want to wait for those earnings first. The reason I say that is look at what happened with Hecla on earnings last week, right? HL was down 17% on the nose on Friday, May 2nd, and that is just brutal price action, right? So I never jump in front of a truck before earnings ever. You have to be really certain that this is going to work because you wouldn't have seen that coming in Hecla's release. It was just selling that fed on itself. So you have to be really careful with some of the silver names. Moving on to critical minerals. I followed this space for many years, and so I'll give your listeners a couple of names, and I'll give you some backdrop first. So when the tariff talk was happening in Q1, right? If you look at what happened with China, the first thing that they came back on the U.S. with February 4th was coming after tungsten and a few other critical minerals. And I thought that was a really interesting approach. Well, when you do the digging, China produces 81% of tungsten production globally. The US produced zero last year, zero the year before, right? So why not buy tungsten US projects, right? Like that was what I was saying all of last year. Like tungsten is going to be extremely rare. And if China and Trump get back into it, like this is going to be one of the first topics. Sure enough, that happened. And then look at what happened with Trump in March. He did his due diligence. I'm sure his team was like, "What's tungsten?" Right? And then in March, they're like, "Oh yeah, we need to put out an EO and say, hey, I want all of you guys to come to me with all of your critical mineral deposits in the next 10 days," right? So I've talked to some of these CEOs that have been approached by people from the White House, like this isn't a farce. And they've said a couple of questions like, how much is it going to take for you to get a preliminary economic assessment on this project, a PEA? Well, that might run 20, 30 million bucks, right? Next question is, how much money would it take to get this project like running? You know, and then it's a big capex number, right? It's 100 million, 200 million, 300 million. But the fact that they're asking these questions is really interesting because they could write checks for 15, 20, 30 million dollars. And that again is not a farce. Look at what happened with Fireweed back in December. They got a $35 million check. That isn't doing a financing, which is dilutive to shareholders. That is a grant, right? So the three that I think in the U.S. right now that are extremely well positioned for grant money would include American Tungsten, which is DEMRF. They just put out a news release today saying they got a DOE member on their board. Like everything about their website is positioning for a check. Right? Like it's just if you read the news, you don't have to be a geologist to figure this out. Like they're positioning themselves. They changed their name from Demesny to American Tungsten to reflect their deposit in Idaho. They got a new CEO who's got a huge financial background. I just talked to you last week for the first time. He was a big shot over at Invesco, which is a huge player in the asset management business. So they're doing everything right there. They have been heavily shorted, so there is a risk there because on bad days the stock will get creamed, but on good days the stock will run hard because the shorts are scared and they cover their shorts, and then you've got buyers like me coming behind it, right? So it creates a lot of volatility. Another one that's less volatile is Guardian Metal, GMTLF. We've talked about that one on your show at much lower prices, but it isn't exorbitant right now. I mean, it's at 48 cents US, and we started to buy it around 15. We haven't sold like hardly any of it. We sold a little bit around 60 because we thought it got ahead of itself a little bit, and it's come back. But they've had some warrant overhang. I think they get through that here in May, and then the stock will just recover. So the last one would be Stillwater. They just got fast tracked by Trump last week, the Stillwater project. So Stillwater Critical is one that we own, PGEZF and PGE in Canada. They're attached to a major in Sibanye-Stillwater. So SBSW is the major. Stillwater Critical is the little small stock, but their deposits are connected, and it's like a huge deposit. It's like a South African type, Platreef type deposit. So that stock was up 18% on that news, Jesse. I mean, in one day. I mean, this is the upside. It's just these stocks are so mispriced, as Don said, that good news can really help them.
Well, this has been a great conversation. Both of you never fail to disappoint whenever I have you on the show. That's why we have you on so often. Just incredible insights
Thanks.
shared. Don, tell us about goldstockdata.com, what it is you do there.
Yeah, so we're not really a stock picking service. We're mainly for data. So we want you to come and do your own. So if you already own some mining stocks, then we want you to come and find some more. So we give you lots of leads, but we don't say like my newsletter. I never write up stocks in my newsletter. I just give you a list. But I get to lots of lists. So, for instance, I have my favorites. My personal favorites is 80 names. So you can look at all 80s, and uh, I have like all the best gold producers, all the best silver producers, lots and lots of lists. You can anything you want to, whatever you want to look at. And then my database is amazing, 850 names, and you can search it in a variety of ways. It's probably the best database out there for gold and silver mining stocks. I haven't heard of or seen a better one, but it's very useful. I remember when I first started doing this, the reason why I created it is I was trying to find leads. I wanted to find, possibilities, right? I just give me all the silver names. Give me all the silver companies. I'll go do my own research, right? So I do that for you, and then I kind of filter it. So I rate every company. I give it like four different ratings: the upside rating, the downside, the quality, and then the risk. So you have like four ratings on each stock, which is useful. So it's very useful for doing your own research. But thanks for letting me explain that.
Yeah, of course. I'll put a link to goldstockdata.com in the description below. John, tell us about Feneck Consulting.
Yeah, sure. So we have been running money in the space since I was at Sprott. So at 2016, we'll have our 10-year history this year, which is December of this year, which is hard to believe. But I'm working very hard, Jesse, to make sure that we have a good year. And when we drop the mic at the end of the year, we're gonna hopefully be ranked in the top 10 globally. I think for track records, we were up 40.7 in the first quarter, and we're gonna have a great year. I just feel it. And I wasn't saying that, as you know, the last couple of years. I was sort of like, things could go either way here on the equity side, and we were building positions early, but now I'm like the table, as Don said, is set, right? The backdrop is there. Where in previous rallies, like we saw in mining stocks like '09 to 12, the backdrop wasn't there. The backdrop wasn't there for the Fed. It wasn't there for the bond market. It wasn't there for banks. It was just, I think all the stars are aligning right now. So people can buy our newsletter. That's like 75 a month, or they can go to a real-time service that we offer, which I think is very helpful because we'll talk about things like non-farm payrolls on Friday, right? We literally put that out 2 minutes after the number to say the number was a beat, but here's why we're not so worried, and how it would affect trading that particular day. So we have a lot of people that are active in the market that are looking at that kind of stuff. GDP was another great example, right? A huge miss recently. We came out with numbers on that. So this is going to be a volatile day. This is not something that was expected. And Yeah, so I think both the macro side and the company specific side will comment on public news when it comes out, like we talked about with Denarius when they declared commercial production. We put that out to make sure people understand that how significant it is for a junior to go from exploration to development to production real quick.
Great. Well, fennecconsulting.com is the site. I will have a link to it in the description below. I'll also put a link to both of your X profiles so people can follow you there. Once again, guys, thank you so much for coming on, and I'm excited for what will be, I guess, part 6, 7, 8. We're going to keep this going in the future, so hope everybody stays tuned.
Thank you,
Thanks,
Jesse.
Justin.